Oil just hit the 98th percentile. And oil at this percentile has preceded demand destruction in 4 of 5 cycles. Something is breaking beneath the surface and the data confirms it. Right now, oil is at $103.9, the 98th percentile for the past year. Historically, oil at this percentile has preceded demand destruction in 4 of 5 cycles, says the data needs to confirm. The commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the number shifted. Pay attention to what moved and why. The commodity analyst called it commodity supercycle. Oil at $103.9 confirms it. 113-day streak, McElroy might be right, but the data has not confirmed the thesis yet. 112-day streak, Hartman might be right, but the data has not confirmed the thesis yet. 106-day streak, too early to call the dollar analyst right or wrong. The thesis is building but not confirmed. Gammon just moved from right to early, too early to call Gammon right or wrong. The thesis is building but not confirmed. Snyder just moved from right to early. Snyder might be right, but the data has not confirmed the thesis yet. The volatility expert just moved from right to early. The volatility expert might be right, but the data has not confirmed the thesis yet. Score today, 1 right, 6 early, 0 wrong. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Today's big question, are commodities in a supercycle, or is this the top? On one side says, the data needs to confirm. That is the setup. Everyone hears it on the podcast, it sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here's what makes this interesting. Oil is rising while gold is falling. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. Oil at $103.9, 98th percentile, up 7.6% today. Gold at $4,744, 82nd percentile, down 0.4% today. Copper at $5.85, 89th percentile, down 0.3% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $103.9. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $103.9 is in the 98th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,744 will track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 67 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment-grade spread crossing 150 basis points, currently at 83 basis points. Pace is flat or improving. No urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, copper-gold ratio, flashing red. Phase 1 holds with 67 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. MI, days on market, is spiking in Warren. Days on market in Warren moved plus 100% in 30 days, now 147 days. Buyer leverage score, 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. MD, days on market is spiking in Baltimore. Days on market in Baltimore moved plus 100% in 30 days, now 163 days. Buyer leverage score 71 on 100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Jackson County, NC, payment burden is past the breaking point. Cashiers, NC, median home about $1,477,000 on about $73,000 household income. Price to income ratio 19.9. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Oil at $103.9 is in the 98th percentile. That means it is higher than 98 out of 100 days in the past year. In 2022, oil spiked above 120, then demand destruction pulled it back 40% in months. In 2020, oil went negative for the first time in history as demand collapsed. In 2018, oil dropped 40% in Q4 as growth fears overtook supply concerns. Different environments, different catalysts, but every time the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, copper at $5.85 is in the 89th percentile. The last time both oil and copper were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here's what the data says to do right now. Do not chase oil here. The 98th percentile is reversal territory, not an entry point. Avoid Phoenix at 42% payment burden. That is stretch territory. Phase 1 holds. No alarms, but the runway at 67 basis points is shorter than last month. Only one speaker is right this week. Low conviction environment. Size position smaller. Every signal is live at analyze.builderslens.com. The talking heads give you opinions. We give you the numbers. Subscribe and I will see you tomorrow morning with a fresh scoreboard.